Injective INJ surged 11.5% in a single day without a single breaking headline, no partnership, no exchange listing, no sudden celebrity endorsement. So why is momentum building now? The answer isn't in one event, but in a quiet structural shift. A supply squeeze tightening faster than the market expected, institutional access finally opening, and social metrics flashing rare intensity for a mid-tier token. This isn't just price action. It's a convergence of mechanics that could redefine how the market values deflationary pressure in proof-of-stake ecosystems. Over the past 24 hours, INJ climbed to $5.29, pushing its market cap to $529 million with over $254 million in daily volume. That volume-to-market cap ratio is unusually high for a token ranked 87, signaling deepening participation rather than a flash-in-the-pan pump. What's fueling this? Not speculation alone, but three interlocking forces: a governance-driven acceleration in token burns, regulated futures now live in the US, and a social heat index that's peaking while the broader market remains fearful. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. At the core is governance proposal IIP 617, the key turning point. This vote, approved with 99.96% support and more than 22 million INJ staked in favor, permanently doubled Injective's deflation rate. Since then, 6.87 million INJ have already been burned. That's not just a number, it represents a fundamental shift in scarcity dynamics. With only 99.97 million INJ in circulation, each burn compounds the supply shock. And the burn mechanism isn't static. The Community BuyBack program runs monthly, where participants commit INJ to be destroyed, and in return, receive a share of the buyback pool. Across the first 4 rounds, 178,338 INJ were burned, and $776,000 was redistributed. The May 2026 round alone reportedly targeted over $167,000 worth of INJ for purchase and burn, further tightening the float. But scarcity alone doesn't move markets without access. That's where Bitnomial's April 15 launch changes the game. It introduced the first US-regulated injective futures contract on a CFTC-compliant exchange. This isn't just another listing. It's a compliance milestone. For institutional traders, hedge funds, family offices, regulated funds, this opens a legal, audited path to gain exposure to INJ without touching self-custody or spot markets. Eric Chen, a key figure in the ecosystem, called it a validation of demand for institutional-grade access. More than that, it starts a 6-month clock some analysts view as relevant to generic US crypto ETP listing standards, a trend that echoes the growing institutional push into tokenized products across the industry. Then there's the social layer. While the broader fear and greed index sits at 42, solidly in fear territory, INJ's LunarCrush Alt-Rank is 6, and its Galaxy Score is 76.2. That disconnect is critical. It means while most of crypto is cautious, Injective is drawing outsized attention. High social momentum like this can sustain rallies even in risk-off environments, but it also introduces fragility. When sentiment flips, overcrowded narratives can unravel fast. Another catalyst looms: native USDC support via Circle's cross-chain transfer protocol. While not yet live, the announcement alone has traders watching. If and when CCTP integrates, it could bring seamless, trust-minimized USDC transfers to Injective's DeFi stack, potentially unlocking new liquidity, lending, and trading activity. For a chain built on decentralized finance, native stablecoin rails are not just an upgrade, they're infrastructure. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Still, risks remain. No new official announcement on May 13 means today's move is riding on the cumulative weight of past catalysts. Volume must hold above $200 million to confirm sustained interest. If it drops below $100 million, or if Bitcoin corrects sharply, INJ's rally could stall. And while social momentum is strong, it can flip from fuel to vulnerability if the narrative weakens. The next signal to watch is clear: the mainnet launch of USDC via CCTP and the June buyback round participation levels. Until then, Injective INJ is trading on credible, already verified developments, not hype but mechanics. The real story isn't just the price surge. It's whether a decentralized, community-driven deflation engine can hold against broader market tides. For now, the pressure is building, and the market is watching.